What is going on, investors? Hopefully you guys are doing well out there. Time to talk about Tesla Incorporated, ticker symbol TSLA. The company just reported their Q1 earnings after the bell today, and so we're going to jump into the numbers and kind of dissect these things. Take a look at the revenue, the profits, the regulatory credits, the gross margins, the cash flows. We're going to do a deep dive into the numbers. If you're confused by any of these numbers, hopefully I'll be able to clarify those as we move through this. Now, and then towards the back half of the video, we're going to jump over the stock chart, okay? During the regular session, this stock was up about $8. After hours, down just marginally, okay? Basically flat over the day. So we'll talk about, okay, where are some spots where you could potentially buy Tesla? Where are some spots where we'd actually anticipate some sellers to step in on this one too? So we'll talk about that as well. Now, Q1 came in. Tesla over the last year up 400%, but year to date, the stock's actually up only, and I say only, 3%. And so I get comments on my channel, get questions from families and friends like, what's going on with Tesla? It's not going up anymore. It's going sideways. And they get kind of concerned. The only thing I would tell you is this stock is taking a breather. And there is absolutely nothing wrong when you had a monster run. This stock went from $176 up to over $900 per share last year. Okay, there is absolutely nothing wrong with this thing trading sideways, not just in Q1, but maybe potentially all year. There is absolutely nothing wrong with that. If you look at the stock chart of Amazon, of Apple, of Google, of any tech stock, some of the larger tech stocks, they've all gone through phases where they've taken a breather and they haven't outperformed other stocks. It is okay, especially when you come off these big legs of monster moves. Now, this is a $700 billion market cap company. It has a P ratio of 170. It has to grow into this. If this thing just went up and up and up, you'd have these big gigantic drawdowns, as we've seen with Tesla. But the more that continues, the more it can provide stomach aches for investors. Also, think about it this way too. 3%. If this thing goes sideways for a year, what does it allow you to do as an investor? Allows you to accumulate shares. Honestly, if this thing just keeps ripping upwards, I like to buy things at a stable price or a low price. I don't want to go to the store and buy bread one day at $6 and then it's $12 and then it's $13 and then it's $18. That would make me very frustrating. And so the fact this thing is going sideways, a little bit more predictable from a price perspective, I actually think this is good. Now, in the quarter, they sold $300 million worth of Bitcoin. They got a profit from it. We'll show you that when we get over to the financials. Now, they cruised past Q1 expectations, and they point to this gigafactory and kind of some other production momentum. We'll talk about that as well. The other thing we'll talk about broadly here on the show, on this episode, is that we'll talk about there's lots of bear case. So people that think Tesla stock is overvalued and it should go down, we'll debunk some of those myths and some of those arguments. I'll be able to debunk some of those as we go through this. So if you're getting in a discussion with a family member or on a message board or something like that, or on Twitter, I'll give you some fuel to debunk those myths. Let's jump over to the financial summary here. We've got automotive revenues here. We've got our Q1 highlighted in red. This is our most recent quarter. They go back quarter over quarter over quarter and then back a year. So this left-hand column is a year ago. This right-hand column is our most recent quarter. And then they give a year-over-year percentage growth on the right-hand side. So we see our automotive revenues came in at $9 billion, quarter over quarter actually down. We'll show you why that potentially is, but year over year, you're up 75% on this one. Now, they've got these regulatory credits. Now, if you're not familiar with Tesla, they have sold so many EVs that they've acquired a ton of these regulatory credits that they're able to sell off to other automobile makers when they start selling more of their EVs. And so Tesla has just stacks and stacks and stacks of these, and they generate a fair amount of profit, as you can see, every quarter based on these regulatory credits. It's a very profitable business. In fact, from a net income perspective, they're actually not profitable if you don't include these regulatory credits, but I'll tell you why. That is more of a bear case myth than reality. We'll talk about that here in a minute. But the regulatory credits are up 46%. The other thing is bear case will make the argument on Tesla that, look, these regulatory credits will run out, that this is not a sustainable thing. Well, I tend to agree with that, but right now we have a president and an administration in charge that really support these credits and look to actually expand them and extend them. So the longer that you have someone like that at the federal level, and certainly at state levels as well, these things will likely to continue. Now, automobile gross profit is up to $2.3 billion. We see that is higher than any quarter, and it's 82% year over year. Automotive gross margin, this is a number I pay close attention to, up to 26.5. Now, it's not as high as our Q3, but year over year, it's up just a little bit, almost a full point. So you like to see that. They're expanding margin as they're developing and selling more of these cars. We've got our total revenues coming in at $10.3 billion. That's up 74% over the previous year. Now, what I want to show you here is total gross profit coming in at $2.2 billion. That's a number I would pay very close attention to because this gives you profitability from a gross profit perspective. Now, it's not factoring in our operating expenses, our income from operation, things of that nature, but this is up strong 79%. It is showing you here our revenues are up 75%, but we grew our gross profit 79% because we expanded this margin here. That is very nice. Now, we've got operating expenses, okay? And those are up 70%. So we grew our top line 75%, but we grew our expenses 70%. That gives us income from operation right here at $594. Again, if you factor in these regulatory credits, this company is very marginally profitable from an income from operation perspective, okay? So that gives us very slim operating margins on this company at 5.7%. So that is one case that the bears can make, is that overall, this is a company that is running at a very slim profit margin, and I would agree, but again, we'll talk about why these operating expenses are so high. Now, you got net income coming in here at $438. That is much higher than any other quarter in the past. They are doing a nice job driving profitability. That is the other thing about Tesla that is different today than a year ago, and especially 2, 3, 4, 5 years ago. This is a company that is more profitable and is actually generating positive cash flow, free cash flow, on a quarterly basis. They used to just be burning through cash as they were scaling up the business. Now you see they had $8 billion in cash last year. Now they have $17 billion, okay? So they are not doing as much fundraising. That means you as a shareholder, a common shareholder, is not being diluted very much or as much as you were in the past. That is also a positive for you. Now, they had some sale of Bitcoin. It had a $101 million positive impact, and we'll see that when we get further down into the balance sheet. Now, operational summary. Model S and Model X, that's obviously their premium vehicles. These are $80,000, $90,000, $100,000 plus vehicles. Guess what? They delivered 0 of them, or they produced 0 of them. They actually delivered 2,000 of them. But of the new models, it appears that they delivered 0. So they're still ramping up production of the new ones, still working on that, still rolling out. Here's my talking point on this. Okay, Model S and Model X are vehicles in a specific category right now. If you are looking to buy a Model S or a Model X, there is virtually no other. If you're looking for a luxury EV that's $80,000 to $90,000 to $100,000 plus vehicle, there is almost no competition. Not from Mercedes, not from Audi, not from BMW to a certain degree. There is not much competition, okay? So buyers are willing to wait. Okay, because I know people that are waiting. I personally know people that are waiting for a new Model S or a Model X, and they don't care if it gets delayed a month or 2 months. But what happens in 3, 4, 5 years when Porsche might have a nice car that you can buy, when Mercedes has a nice one you can buy, when Audi does, when BMW does, when other car makers have a full line of cars, especially from the premium end? Can Tesla get away with delivering these cars way later than they promised in the beginning? We'll see if that happens. That's definitely something a bear case can make. But as we've seen, We've talked about Mercedes and Audi and BMW and all these other car makers coming out with an EV. And guess what? They still really don't have one, at least on par with the Model S and Model X at the current time. Now, Model 3 and Model Y, the more affordable cars, these are humming at 180,000. You delivered 182,000. That is 100% growth year over year. On the delivery side, that's up 140%. So all things being considered, it was just a fantastic quarter in terms of production and delivery. Now, the other thing that I think gets overlooked with Tesla, okay, are these supercharger stations, okay? Notice that we grew those 41% year over year. These things are growing rapidly. If you own an EV, it is very, very difficult to charge these things if it's not a Tesla. Now, Tesla is starting to open up their supercharger stations to other car makers, and that will likely be a profit source for them going forward. But in my opinion, this supercharger network and this supercharger station, Tesla is as far out in front on these things as they are with the cars. It wouldn't surprise me if Mercedes and Audi get their electric vehicles out. They already have production, somewhat of those out. It wouldn't surprise me if they can get mass production of them. But where the heck are you going to charge that thing? Okay? These supercharger stations are a big moat, in my opinion, around Tesla business. Now, some of you might say, well, part of Joe Biden's infrastructure plans is plan to build out supercharger networks. Well, guess what, guys? Anything that the federal government does always costs way more money and takes way longer than doing it the private sector. So I wouldn't necessarily count on that biting into Tesla's supercharger network advantage. Now, this is an interesting slide. They say, what cars do Tesla buyers trade in? Almost none of them are trading in an EV, but most of them are coming from Audi, Lexus, BMW, Ford, Honda, and Toyota. So I thought that was interesting. Now, the other thing was interesting in here, they're showing you they're in production in California. They've got some production going in Shanghai. I think they're still building that up. They've got Berlin under construction. They've got Tesla under construction. Now, in development is the Cybertruck, obviously, the Tesla Semi. Both are expected. I know the Semi in particular is supposed to have some deliveries, just a small amount by the end of the year. You got the Roadster, which I think people are excited about, especially the high-end buyer of Tesla. And then look what they have here, future product. This could be, in my opinion, what I would get excited about is another even cheaper car than the Model 3. If they can get another cheap car on the road at Tesla, holy moly, their competitive advantage will just continue. Got some other things. They're showing you that the range is improving on the car. That's obviously important, especially when they compete against other gas vehicles out there. And certainly as you get more EVs on the market as well that have nice range too. Now, here, I'm showing you these pictures. They're cool to look at, but what I want to talk to you about as we kind of cycle through these pictures is these factories are extraordinarily expensive to build. I don't think I need to tell you that. I mean, look at this thing. This thing is gigantic. It takes a ton of workers and a ton of effort and a ton of money to build these things. Okay, this is one of the reasons why Tesla is not as profitable from a GAAP perspective, from a net income perspective, because they are still building out their business. Okay, this reminds me of the Tesla and Amazon. There's some parallels though. I remember 4 or 5 years ago investing in Amazon, and people would say, oh, Amazon's not profitable if it wasn't for AWS. And the same people are saying the same thing about Tesla. Well, Tesla wouldn't be profitable if it wasn't for regulatory credits. And both things are true in a vacuum. But what those short-sighted investors, and in my opinion, kind of kindergarten analysis of the stock, they don't factor in, well, Amazon.com business wasn't profitable because they were building out gigantic fulfillment centers, like 2, 3, 4, 5 of them a month, million square feet a piece. Okay. Tesla's in the same boat. Okay. They have to build out these gigantic factories, not only for the batteries, but for the cars as well. They are not like a Ford or a GM who already have these factories built and supply chains kind of baked into their model. Tesla is still building all of this out, and it's going to take some time, okay? It is going to take a lot of time to not only get these factories built, but get them up to speed and up to production. So as they work through that, yes, from the net income perspective, from a cash burn perspective, it's not going to look as good as a Ford or a GM or another car maker or another tech stock. It is going to take some time. But once these factories are up, guess what? You can probably generate massive amount of cars, massive amount of batteries, and have a massive competitive advantage. There's a semi that is supposedly is in production or testing as well. Now, you got some graphs here. These all look cool, but what I want to get down here is the financial statements. After the financial statements, we'll get over to the stock chart on this one as well. Now, we've got a little bit deeper look at the statement of operations. We've already looked at these. They gave you the high-level view where they showed you the $10.4 billion. In this quarter, they only had about $6 billion in the previous period. I want to show you just a couple things that definitely bears can pick out. The energy generation and storage business, this is a losing business model, okay? They spent $595 to make $494 in terms of revenue. So that's not that great. From the automotive sales perspective, they spent 6.4, we'll call that 6.5 to make 8.7. That is pretty good margin, in my opinion, from the automobile sector. Now, operating expenses, this is the other thing that I want to dive into. So we've got research and development up way big time, way almost double. In fact, it's more than double where we were a year ago. We've got this selling, general, and administrative up big time. Again, almost double where it was a year ago. Here's our restructuring and other. Here's our profit on Bitcoin, okay, right there. Tesla's making money on Bitcoin, baby. It was almost a fifth of their net income came from Bitcoin. So you've got our total operating expenses, again, came in at $1.6 billion. That's $700 million more than where you were. Again, this is not a Ford, which is kind of already kind of streamlined all their operations, or a Mercedes or an Audi. They have to build out tons and tons of stuff over at Tesla. So these operating expenses are going to continue to go up. But the difference between Tesla today and 3 or 4 years ago is they are not burning cash like they were 3 or 4 years ago. And they constantly had to raise money by selling the stock. Well, now they don't necessarily have to do that because they have a net income coming down here at 464. Again, that is up quarter over quarter and up big time from a year ago. Now, from the balance sheet perspective, everything's looking really good. Okay, you got the $17 billion. I don't think they necessarily, again, I don't want to put words in Elon Musk's mouth or anything like that, but this is a company that doesn't look like, to me, they're going to need to fundraise for at least 12 months unless they have some big, gigantic ambitions to do something that's not necessarily on the radar right now. This is looking very strong. You got total assets coming in at, well, call that $53 billion. They were sitting at 37 in the previous period. Now, they've got some debt on the balance sheet, but that's all, basically what we'd expect with companies like this. Total liabilities, everything looking very, very strong. Total liabilities coming in at 28.5, basically flat over the last 3 quarters, up marginally where we were a few years ago. So all things being considered, things are looking good. Now we've got our cash flows. We bring down this 464. We've got our net cash provided by activities running the business, $1.6 billion. Now, I know we were at 3 and we were 2.4, but what you want to factor in Q3 and in Q4, you were selling Model X and Model S vehicles. Okay, so those vehicles probably wildly profitable as well. So once those come back, it could be that you get a little bit more cash running in from the balance sheet. But from a year ago, look, they lost $440 million from cash flows. Now we're churning out $1.6 billion. In fact, you've had 4 consecutive quarters of positive cash flows. Now, here's the other thing that I want to show you. Capital expenditures. This is building stuff. This is building factories. $1.3 billion. They were only at $455 million in Q1. So this is something that continues to grow. And long-term investors that believe in the vision, believe in what Elon Musk is doing, blah, blah, blah. These are capital expenditures that you like, and you like that bears people that are negative on Tesla. like grab a hold of this and think this is negative. This is a positive. Spending this money gets Tesla even further out in front of their competition, in my opinion. Now, cash flows from financing activities, all things being considered, fairly flat from over the last year or last quarter especially. So all things looking really good. And then they do some adjustments there, which I don't really pay attention to. Now, moving over to the stock chart, this thing is right here. Okay, we could probably adjust. So I have the low back here. This was a low we made back in March. We made a higher low here, made a higher low, made a higher low here. And so what we talk about every week on Friday, we talk about Tesla and all the FANG stocks, and we go over the stock charts and kind of talk about price action to see if there's any potential to buy these stocks. What we saw here was sellers are stepping in here at 780, and you actually see here, you could almost put in, I know I probably have too many lines on here, but you could put on a line here at 740. Over the last week, this is a daily view. Over the last week, sellers have just stepped in here at 740, but the buyers have kind of dried up too. And so we've got kind of an inflection point, in my opinion, with Tesla. Are we going to break above 740, come up here, retest 780, a break above 780, and yeah, you're off back to the races, potentially all the way back up to $900. Certainly the $800 range on this one wouldn't surprise me at all. But if you get rejected here at 740, okay, then our uptrend is kind of broken, okay? Especially if you break, I would say this is $700 right in this range. If this thing falls another $24, $25, well, all of a sudden you made a higher low, higher low, higher low, and then all of a sudden that breaks here and the trend will be broken. Okay, and so it could be that you have some pullbacks in this one. The first logical spot would be right in here, right in the $600 range would be an interesting spot if you wanted to get Tesla. Again, this thing rallied down here, went back up, rallied or fell all the way back down to 600, and now we're kind of back up on another up leg. Wouldn't surprise me if we come back here and kind of back test all the way back to 600. Now you start breaking these levels, this moving average, you know, you got some other much lower levels intact with this one. Now, we didn't see the big break one way or another with Tesla, but the way this chart is setting up, it wants to go one way or another, okay? We kind of have a consolidation of buyers and sellers kind of meeting at a point here. Which one is going to win the battle? Okay, are more sellers going to step in and send this stock lower, or more buyers going to send in and send this stock higher? Honestly, it could go either way in my opinion. But if you're long Tesla, you actually kind of want to see this one retrace. Again, back to the $600 level would be the first place I would want to look at this one, unless you catch it on a momentum break up. So this one breaks momentum, goes 740, goes 780. Boy, I'd come in there and play the upside on this one, because then the uptrend is still intact and it's starting to get more aggressive. So take a breath. Congratulate yourself. You just walked through Tesla's entire financial statements. Leave me a comment down below if you have any questions. Be happy to answer them. Consider hitting that like button and maybe that subscribe button too. Look, I'm not asking you to marry me. I'm just asking you to maybe hit that subscribe button if you like what we're doing here on the channel. We'll be back all week. It's a major week. I mean, there's going to be tons of videos here on the channel. Thanks everybody for tuning in today. Good luck with your investments.